Hey everybody, welcome to the game plan. My name is Gareth, Soloway, Chief Market Strategist here at verifiedinvesting.com. You might notice a little bit of a different background. I am homesick today, but still doing the game plan for you guys as I always do, mainly because honestly, there's a lot going on right now. We have so many different avenues that are affecting the markets. Yesterday, we had a rally in the market. Today, we're going right back down with over 1% losses on the indices. And this is a lot of stuff going on here. It's tariffs, it's the worries over the economy, and now it's also something coming out of China, which has to do with Alibaba and potentially even a new AI that is 10 times more efficient than DeepSeek was. And this is now causing the semiconductors today to really take a bludgeoning. Because again, do we really need all these data centers? Do we need these advanced chips? Maybe not. Maybe if this stuff gets so energy efficient, we can be running this on regular networks, on regular energy sources. So in any case, let's jump into the charts here today as we take a look. You can see again, the markets, this was yesterday, by the way. So you can see early in the day, we kind of chopped. We had one little dip, and then this is where word came out that Trump was thinking about delaying the auto tariffs only for 1 month. And that's where the markets rallied into the end of the day. After hours, not much went on. This morning, by the time the SPY opened, we could see that the markets were down and continued to move lower. Now, just remember, folks, we are looking at tomorrow's big data point, the non-farm payrolls. So again, if it wasn't for this news from Alibaba, I think that in general, the markets would be much more flat. In fact, futures last night were flattish in the overnight until this news hit. And then that really just took it all out of the markets. All right, let's go to the S&P daily chart. I want to be able to show you guys this. So this was the rally yesterday. We're looking at the daily chart. So each of these candles is 1 day long, right? And we can see again, yesterday was a big pop or big rally. But right back today, here's your pre-market print, 575.76 now, and we're almost back to yesterday's lows. Now, again, what do we know about this market, guys? Once we confirmed below this line, right, that goes back to 2023 right here, to this low, we know that it's a sell the rip market, not a buy the dip market. And so it should not be super surprising. Here you had a buy the dip yesterday, and then it was sell the rip, boom. By this morning, it's all the way back down. All right, now there's another level I'm watching here. If we take a look right here, see this low pivot going back to January 13th, a trend line goes right through here. So this is now my new short-term level for what I'm going to be monitoring in terms of, do we close below? Do we confirm? If we do, look for further downside. My next downside target would be right through here. And again, this would be around 564.5. Notice the pivot high here matches with this, and then right in here as well. And again, even right here, that should be some significant support. So again, if we continue down below this level, your next stopping point should be right around 564 on the SPY. Remember, the SPY is the tracking ETF for the S&P 500. It gives us pre-market data, so it gives us a little bit more to work with in terms of monitoring and analyzing the market. All right, we have to look at the 10-year yield. Remember, the 10-year yield was falling into support. We talked about how this was likely going to bounce. The last 2 days, we got a bounce. Today, we're basically flat on the 10-year yield. Not much going on there at this point. But again, in general, I think yields are going to go lower. That's not really a good thing, though, because it tells us the economic picture is probably getting cloudier. Now, again, what will the jobs report say tomorrow? We're going to find out. Maybe it still has a little bit of upside, but either way, net, I would expect yields to come lower. And just zooming out on the chart, where would a general target be? I was kind of eyeing this level here. This would be a big level of support right here. You can see the lows from 2020. So this was basically going back to COVID. In fact, we can really kind of stretch it all the way back here to these lows. So from the low of the COVID panic, lows here, and here. So what I'm looking for is eventually in the next 6 months or so, yields to trade down to 3.3%. Also, I want to show you this. Look at this. If you take this low right here, what happens? it matches up perfectly with that level. So to me, anyways, that's my short term. Well, it's more of a midterm target. Shorter term, the big question is the jobs report. If it's a strong jobs report, we could see a little bit more upside. A week's jobs report, we probably sell back down to the downside. The dollar, we have to look at this chart. This is an amazing chart. I annotated this one up for you guys probably about a week ago or so. Here's your shoulder, head, shoulder. Okay, there's your break. So this triggers the head and shoulders pattern. Confirmed right here. Choppy, retrace, and then look, boom. And I had a measured move target of 103.90. Well, guess where what we've hit today? We've hit 103.90. All right. So again, this is the power of understanding technical analysis. Now you might say, well, how do you know that target, right? I mean, how did you come up with that? I'll show you right now. I have no problem with that. Just simply take the high of your head, of the head and shoulders, drop a plumb line straight down to the neckline, which is this line here. Okay. Take that distance, and from the break point right here, all right, so where it breaks right there, that's your target right there. All right, so again, what I would anticipate now is the dollar should see some sort of technical bounce here, something like that, and then eventually I think we could go lower. But in the short term, I would anticipate a bounce on the USD or the Dixie here in terms of price action. All right, quickly flipping over to NVIDIA. NVIDIA again, by the way, folks, this one does have a head and shoulders, so I'm going to show you something on that in a second because we just went over it. But NVIDIA, here's a longer term trend line going back to early 2024, just about 1 year ago. And we have gone below, but ask yourself, have we confirmed? And the answer is no, we haven't confirmed yet. But again, it is doable. We could very easily confirm today. But NVIDIA, again, on that Alibaba news is down significantly along with the other semiconductors. And again, you could look at Broadcom, you could look at all the rest of these. They are down significantly. Now, I want to show you guys the head and shoulders that I was just talking about. And this is kind of what gets me it just blows your mind if the calculation ends up working in this scenario. Here's your shoulder, head, shoulder, right? All right, so here we have our head and shoulder pattern. Now, if this plays out to target and we close below and then we kind of have closed back on, but the point being is that I'm really looking for a break below with confirmation. But just to do this out, let's do a quick measurement here. Let's go from the high of the head to the neckline. And a lot of people will say this is crazy, but let's just say we break here. Look at this, guys. Your NVIDIA target of your head and shoulders would be at around $70. That's remarkable, folks. I mean, think about NVIDIA going to $70. Now, again, the big issue here is that, like I said before, with Alibaba's news out there, and we can flip over to Alibaba, which is up again today. And by the way, guys, was this not the best retrace to the scene of the crime that you've ever seen? I mean, this is one that I went over in the game plan. Here it hit, and then look at the move up. Incredible. I love these breakouts that retrace into these levels here. Incredible move. But the idea again here is that as advancements in technology continue, the energy needed to run AI is going to go down sharply. And the question again is, how many data centers will we need? Because if they're all more efficient in all aspects, do we need these crazy advanced chips from NVIDIA? I don't know. But it is something just to kind of keep an eye on. And that's why the chip stocks are down so much and why Alibaba has had an incredible run. By the way, KWeb, you can see KWeb again right here. Look at this trend line right there as well. Let me just refresh that there. There you go. Look at that trend line there. And then look right here. This, at some point, we probably break out on this. But again, you're not chasing it up. At least I'm not chasing it up here. It's had way too big of a move. KWeb, by the way, is the China Internet ETF. And then FXI is this one here. And you can see FXI. This one I had major support marked off right here. Never quite got there. You can see here and then ran up. But that's the nature of real trading, is that most of the time the levels will hit, but sometimes they don't. And that's just the nature of the beast. All right. MongoDB is taking a beating today. MongoDB down almost 20% on the day with a big fall. You could see this trend line right here. I want to show you where that comes from. That is a level right here with this low. Because we've already violated it to the downside and gone below it, this no longer is a level for me to trade. All right. So again, I'm erasing it. Now, I do have other levels here to keep an eye on. This one's quite a bit lower, around 177. This one comes from this low here to this level here and right through. But again, at this point, I wouldn't anticipate MongoDB getting down that far today. That would be pretty insane, frankly, if it were to go down that much. Another level potentially for a trade today would be maybe in this range here. You can see low pivot to low pivot. This is right around 210. And if we go to the 10-minute chart, you can see that's even, we've already kind of just touched that. Well, we're touching 210 right now, but nonetheless, that's kind of right here is support. Otherwise, I don't have a whole lot of support on the chart. There'll be a secondary level here at this low at around 190. And by the way, why I'm going through this is because I'm going to be day trading in the live day trading room in just, basically in 20 minutes. And I want to be able to know where my trades are for the day on MongoDB. All right, Marvell, another AI stock. This one's getting trounced, trading down about 17, make that 18% pre-market. If we go to the intraday, you can see it just made new lows here. It's coming off of those lows on the intraday. If we flip over to this area, this is my zone right here, 66 to 63.75. There's a gap fill here. The line goes through gap window right to here and right through here. And then there's a gap fill right below at 63.75. So when levels are this close, it basically becomes a support zone. And this would be a very good level today if we saw a flush down to 66 to 63.75 for an opportunity there. All right, next up, let's take a look at Bitcoin. Now, Bitcoin, again, behaving as the chart says it should. What do I mean by that? Well, we broke below, and you guys, if you've watched this, you guys know, I'm going over this again, but broke below, confirmed, and then bounces, closes back above. But as we know, if you confirm below a level, you must reconfirm above to reestablish that. It didn't do that, and it got wiped out. Then look right here. Yes, or today it was above, and then look, it's getting rejected again. So it tells you right here that this 91, 92,000 level is a big, big level of resistance now. Now, again, if we can close above here and confirm, then you could trade all the way back to 108, 109. But as long as we stay below, you have to be saying, okay, there's a decent chance that we're headed all the way back down to 75 to 73,000, maybe even lower. But I guess that's my short-term price target in the meantime. The other thing I want to just show you guys here, this is a chart of Bitcoin as well. But remember when everyone was saying that I was crazy for calling the high on Bitcoin at 108? And that's, by the way, this was even before it got to 108. This was when it was basically trading at 100,000. I said, all right, guys, it's going to go to 108, and then it's going to stall out. This was the chart that told me that it was going to do this, or at least that there's high probability that it was. And the reason I say that is simply put here, if we do this, right, here's your high from 2017. Here's your first high from 2021, your second high from 2021. Connect those. And sure enough, your first high, your second high, and so far, that's been dead on. Now, that line is good, but it makes it even more significant when you can have a low like this that is a parallel. So parallels, when you have a parallel on your chart, folks, it kind of tells you that the trend line you're using here is more substantial, right? It's not just an arbitrary line connecting a couple highs. There's actually lows that match up as well to that. And I think that's really, really important here as well to kind of understand how significant this high was. Now, do I think eventually this high can be taken out? Yeah, eventually I think it will be. But again, shorter term for this cycle, or at least for this period, that was a good signal that we were likely going to come off. And so far, from peak to trough, we have corrected down from all the way down about 30%, 29%. So we'll have to see if we do come down to this area here, which is that first support level on the charts. All right, next up, let's flip over to gold and see what gold is up to. If we go back to our daily chart, gold, again, is slightly lower today. Not much going on there. And again, gold will probably have a bigger move tomorrow on the jobs report, as the dollar would be anticipated to make a bigger move as well. But remember the analysis from yesterday's game plan. Here's your high. As long as you don't have a daily close above this high, this down move, this is an inside bar bearish kind of up move with likely further downside. So again, as long as we don't take this out on a daily closing basis, I continue to favor a move down here maybe even down here. And by the way, these two lines are going to intersect, right? So if we bring these out, by April, by the beginning of April, these two lines are together. So it's very, very possible that we could even be looking at something like this where, let's say it comes here, then it goes like this, and then it comes here. And then that's where you get your big pop back up and head all the way up potentially towards this level up here, right? So that at that point would be about 3,075 if it plays out like that. Okay, just again, these are all scenarios that are possibilities. We don't know for sure, but I'm just gaming it out as based on probability and the charts and how these patterns generally do their thing. Silver, let's take a look at silver here and see if there's much new on silver. Silver, small pullback here. Again, didn't quite get up to resistance, coming back in. But again, silver for me, shorter term resistance, support, and it's just inside of this range, right? Up, down, up, down, up, down, up, down, until we break either out to the upside or to the downside, one or the other. But right now we're stuck in what we would call a wedge pattern, connecting this line and this flat top, and you just kind of extend those out, and eventually those two lines will meet at some point in the future, creating the wedge, right? That's essentially a triangle. All right, oil, we know oil flushed into my key support yesterday. This was pretty remarkable, guys. So again, oil came down, piercing 66 to 65, and then it is getting a bounce today. I did tell you guys that that was a likely scenario. Oil is pretty short-term oversold here. If you look at how big of a drop, this went basically from $80 with a few small bounces along the way, but essentially coming down into this 66, 65 level. I would anticipate a bounce here, whether it's to 68.5 or maybe 70, and then you get your next bigger rollover, which potentially takes us down quite a bit. I have some targets to the downside, 43, then 35. Who knows which ones go to it, but essentially that'll be what I continue to kind of keep an eye on. I'm just extending these out because essentially what you're creating here is a wedge pattern, right? So at some point we break one way or the other. Based on what I'm seeing, based on the economic data, you would anticipate a break to the downside, maybe after a bounce here. Let's go to natural gas here and see what we have on nat gas. And if we refresh the chart here and we see what's going on. So nat gas is selling off. Now notice we did close above the gap fill and this upsloping trend line yesterday. But again, ask yourself, did you confirm? And the answer is no. All right. So again, now you're back below. And that's, again, don't get fooled on the breakouts. People think that this is a breakout. I would say more often than not, it is not a breakout. Once it confirms, then probability flips and says, okay, now it's most likely. And by the way, notice how I'm saying most likely, because there's no guarantees in trading, right? I mean, something could confirm and it could still fail. It's just probability wise that it now, once you confirm above or below level, now it's probability wise very likely that it's a real breakout or breakdown. In this case, it just closed above, probably stopped out a bunch of shorts, and also probably flipped a bunch of longs to get in the trade thinking it's a breakout. They do the old rug pull right there and bring it right back down. Short term, I would continue to anticipate a pullback on natural gas. Short term support will be somewhere in this vicinity here, right in here. And you have this high, and then this low here. That should be a general level there. All right, quickly, just again, before I wrap it up, let's just take a look at some of the mega caps here. Amazon is trading lower. If I zoom out on the Amazon chart, my big level on Amazon where I'm watching for this to come down, where I would be a buyer as a swing trade, right here at 180-ish. Notice again, upsloping trend line from the lows of January 2023. That would be, if we fell right into that level, that would be a high probability level for a bounce. Google today, or Alphabet, is up or is down a little bit after 2 days of bounce. Notice again, it's kind of coming right into this area here. If we take a trend line right through these highs, kind of gives you a reason why it came down. Look at that sell-off, by the way, massive sell with a bounce. But now if it breaks down, where could this be going on Google? And same thing, I would take the lows here. Oh, look at this. It's already hitting that. So this to me tells me that if this breaks, it's going here now. So you have to go to the next level. And look at that. High pivot, low pivot right here. So $150 to 148. That would be an awesome swing trade level right there on the chart of Google. All right, let's look at Meta real quick. Meta has had a monstrous move. Look at this beautiful parallel. So the parallel again, continuing to guide us. That marked the high right there. Now, if you hit the lows, that will be support. It's right around 595. So 595, give or take, basically a $600 pierce. That would be a low pivot there. And then you look for a bounce, and then eventually upsloping parallels break to the downside. All right, usually on the fourth, fifth, or sixth hit. So if we look at this, we've had one hit, two hit. This is just counts as one, because so this is total of two. And then you would hit, that would be the third hit. So you'd expect a bounce. And then the fourth hit, the probabilities go to 50-50 of a break. If it bounces again, fifth hit, 60-40, sixth hit, 70-30, etc., for a break to the downside. Again, everything is a matter of probability in this game. It has no cares about what it feels for us or what we feel for it. All of this stuff, again, is key. Microsoft, last chart here. Microsoft, after a good bounce yesterday, is pulling back today. And this is the last one I'll do here. I'll do Tesla maybe tomorrow or something. But you can see the support level here. All right. So if we do go through and break this, and by the way, 1, 2, 3. So you expect a bounce, which you're getting. Now it's coming back in again. If we break this, your next area of support, look at this level. This would be your next target. Do you guys see why? High pivot, and look how it lines perfectly up with that low right there. So again, that would be your next target for a bounce, 365, 366 on the chart of Microsoft. All right, guys. Again, coming to you guys from my home office here. And yeah, I'm not doing too well. I have a fever, but all good. We got to get into this market. I'm going to be trading anyways today, even from here. Maybe by noon, I'll go crawl in bed. But either way, I always want to give you guys the analysis. Plus, it helps me focus on the market when I can talk to you guys and give you guys levels that I'm going to be looking at anyways when I'm trading today. So as always, folks, thank you so much for being amazing followers of Verified Investing. Thank you guys again for supporting us and understanding the probability game and the technical game really sets you free. As always, folks, again, I'll be back. Drew will cover trading the close today. I'll be back for game plan tomorrow. You guys have a good one. Take care.